The crypto market remains in a delicate balance as traders continue to watch for signs of the next big move. XRP is holding strong at around $2.99, clinging to a solid support level despite ongoing corrections across the broader market. Bitcoin is trading at 111,000, Ethereum at 4,500, and overall the market has been relatively calm, though some argue that this stability reflects heavy manipulation rather than organic growth. Still, XRP's resilience at this support zone is significant because it sets the stage for the next potential breakout. Meanwhile, the global financial environment is gearing up for a crucial month. September could bring the first interest rate cut of the year in the United States, a development that many analysts believe could provide a major boost to risk assets like cryptocurrencies. Current probabilities show an 87% chance of a rate cut, a figure that has captured the attention of investors across every market. If the Federal Reserve delivers, the injection of liquidity could be exactly what the crypto market needs to shift momentum in favor of a bullish run. At the same time, technology stocks continue to demonstrate their influence on crypto. Nvidia just reported a record-breaking $46.7 billion in revenue, far surpassing expectations. This kind of performance in the traditional equity markets often creates a ripple effect across digital assets, highlighting the strong correlation between tech innovation and crypto adoption. When companies like Nvidia thrive, it reinforces the narrative of digital transformation, which includes blockchain and cryptocurrencies at its core. On the liquidity side of the market, Tether has once again expanded its supply, minting over 1 billion new USDT in recent hours. For many, this is a signal of fresh liquidity entering the market, as historically Tether minting has often preceded market upswings. More liquidity does not guarantee price increases, but it provides the fuel that can accelerate movements when demand rises. At a time when investors are waiting for clarity on rate cuts and ETF approvals, the injection of stablecoins into the ecosystem becomes a crucial factor to watch. Ripple itself continues to move strategically. Jack McDonald, CEO of Standard Custody, a company acquired by Ripple, has openly confirmed that Ripple is betting heavily on stablecoins and positioning XRP as the global bridge currency for these assets. This aligns with Ripple's broader vision of a multi-stablecoin future where tokens like Ripple Dollar, the Japanese yen stablecoin, and the digital euro coexist on the XRP Ledger, all relying on XRP to settle transactions efficiently. This is not speculation anymore. It is a stated strategy by Ripple and its partners, making XRP's role in global finance clearer than ever. And perhaps the biggest news for XRP investors right now is the performance of XRP ETFs in Canada. Listed on the Toronto Stock Exchange, these ETFs have shown strong results, offering a glimpse into what could soon happen in the United States once the SEC finally approves spot ETFs. While the US has been slow to move, Canada's ETFs demonstrate that institutional demand for XRP-backed products is real and growing. Investors are now watching the US approval window in October, specifically between the 18th and the 25th, when multiple applications could finally receive the green light. The anticipation is building because a US approval would almost certainly surpass the success of the Canadian ETFs, given the size and influence of the American financial market. The market is in a strange position right now. On the surface, prices appear stable, but behind the scenes, institutions like BlackRock, Fidelity, and others continue to adjust their strategies, selling or accumulating in ways that shake out retail investors. The recent liquidations across crypto remind us that manipulation is always present, but adoption is still marching forward. Every time we see developments like Ripple Dollar in Japan, MasterCard's XRP credit card in the United States, or the performance of ETFs in Toronto, the same pattern emerges. XRP is embedding itself deeper into the financial system, regardless of short-term volatility. For long-term holders, the key takeaway is that adoption always outweighs short-term price moves, with Standard Custody emphasizing XRP's role in stablecoins, with Tether injecting liquidity into the market, with Nvidia highlighting the digital transformation, and with ETFs already proving successful in Canada. The case for XRP's future utility is stronger than ever. The question is no longer whether XRP will be adopted, but how quickly that adoption will scale once the US joins the global momentum. As September approaches, the narrative is set. If the Federal Reserve confirms a rate cut, crypto could be propelled into a new phase of growth. If the SEC moves forward with ETF approvals in October, XRP could enter a new era of institutional adoption. Combined with the growth of Ripple's stablecoin ecosystem, these forces create the conditions for XRP to finally be recognized not just as a speculative asset, but as a core component of the new financial system. The market may look quiet now, but the foundation is being built for explosive growth. Toronto's XRP ETFs are already showing us what happens when institutions get access to regulated products tied to XRP. The United States is next, and when that moment arrives, the impact could be historic. For those paying attention, it is clear that XRP's story is just beginning.